If you're purchasing medical malpractice insurance, here's a reality on where the market is, where it's likely heading, and a simple action plan to put in motion to keep premiums in check. And don't worry, as I'm not going to be discussing items such as nuclear verdicts, litigation funding, or tort reform, because the reality is those items are out of your control. And if you're practicing medicine in one of the highly litigious counties, chances are you've already experienced the burden of a hardening med mal marketplace, meaning your costs have been steadily increasing, not decreasing. Renewals have been coming in at double digits. Carriers are requiring more and more underwriting requirements, and the availability of carriers from which to purchase coverage from has diminished. Industry warning signs on a hardening medical malpractice marketplace continue popping up, something that hasn't been experienced since the early 2000s, and it took nearly 5 years before rates finally started to ease. Here's the reality. Nearly 50% of all reported medical malpractice premiums rose year over year in 2024. In 2018, it was less than 14%. 46 states reported at least one policy premium increase in 2024. In 2023, that number sat at 36 states. And for the last 8 years, the medical professional liability industry has reported an underwriting loss, meaning the amount of premiums collected are less than the amount of claims being paid out, thus placing more and more of a financial burden on the existing system. And in recent weeks, a rather large medical malpractice insurance carrier acquired another medical malpractice insurance carrier, something that's likely going to lead to lessened competition in the med mal insurance marketplace. The reality, price, price, price. It's the number one motivating factor when it comes to purchasing a medical malpractice insurance policy. It doesn't mean it should be, but if I provide a multi-page proposal full of quality data, chances are you're going to flip right to the premium summary page in order to make a decision. So in advance of a potentially hardening medical malpractice insurance market, here are 2 steps you can proactively take that will likely pay dividends in the future. Step 1, avoid complacency when it comes to benchmarking the cost of your current policy. Have 2, 4, 5, or more years gone by without checking pricing from other leading medical malpractice insurance carriers? If so, you're likely missing out on competitive pricing. For example, if we enter a hardened medical malpractice insurance marketplace, would you rather your premiums start 10, 20, or 30% below where they're at now? Or do you just continually pay renewal premiums, thus falling into the complacency trap? It's sort of like your patient who you remind year after year they must take diet and exercise seriously in order to prevent a chronic illness. Yet nothing ever changes. Present company excluded. Step 2, test the partnership with your current medical malpractice insurance carrier. If you've been loyal to them, yet double-digit rate increases are no longer doable, has your broker provided a forward-looking strategy and an advocacy outlet? Together, you'll discuss with the underwriter your tolerance for future rate increases, along with your risk mitigation strategies, ultimately confirming a price of which is acceptable to you based upon your loyalty to the carrier and overall market conditions. So whether you practice medicine in Michigan or Montana, Cook County or Miami-Dade County, are an independent physician or a partner in a multi-specialty group, are you represented by industry specialists contracted with the top-rated medical malpractice insurance carriers? Or do you find yourself in a complacency trap, much like that patient who can't seem to change their lifestyle habits in order to produce a better overall health outcome? Contact info is up there. Follow along for more tips and strategies. Newsletter out weekly.